Tap an IRA tax-free with an HSA rollover. This is crazy. I didn't know you could do this. My man Rob sent this to me, I think just on Sunday, as a matter of fact. And when I first read this, I said, oh, man, this is awesome. It's still awesome, but not as awesome as I thought. So let's go into this. If you have an HSA, health savings account, you need to either do this or, like the lady said, Kim Langford. I'll try to get her on the podcast, because this is nuts, man. I tell you, this is Kiplinger. Kiplinger's is a great site. Not nearly as clickbaity as Motley Fool. I just love Kiplinger's. I do. I'm a huge fan of Kiplinger's Tax Foundation. I like Motley Fool. I do. But Kiplinger's is my go-to for all things financial. It should be yours, too. All right. Dateline, February 8th, 2019. Question. I'm going to have knee surgery in a few months, and I'd like to roll over money from my traditional IRA to my health savings account so I can take the withdrawal tax-free. How much can I roll over, and what are the rules? I'm telling you, I didn't even know you could do that. So the fact that this guy or lady who's even asked is like, man, that's fantastic. So great question, and our friend Kim here has even a better answer. You can make a one-time rollover from your IRA to the HSA as long as you have an HSA-eligible health insurance policy, high-deductible health plan with an HSA attached. You can roll over the limit of your HSA contribution for the year minus any contributions you've already made. That means you can contribute or roll over up to $3,500 in 2019 if you have a single health insurance coverage, or up to $7,000 if you have family coverage. If you're 55 and older, you can contribute or roll over an extra $1,000. I wonder if that means you're like, I'm just thinking. So if you have a family health coverage, would your spouse be able to also roll $7,000 plus the extra $1,000? I don't know the answer to that. So you have family health coverage, you have an HSA. I guess it's the same thing. So it'd be $3,500 because we have an HSA. I guess it just falls under my wife's. Yeah, so I guess the max you could do is $7,000, and if you're over 55, why over 55? Why not 50? Okay, either way, $7,000 to $8,000. All right, so I mean, this is still a good deal. Rolling over money from a traditional IRA to an HSA changes it from tax deferred to tax free. If you use the HSA money for eligible medical expenses, you can only make an IRA to HSA transfer rollover once in your lifetime, and you must transfer the money directly from the IRA to the HSA for it to be tax-free. Ask your HSA administrator for this for the procedure. To qualify for the HSA eligible policy, the insurance must have a deductible of at least $1,350 or for single coverage or $2,700 for family. All right. Rather than doing a rollover, it's better to make new contributions to the HSA instead if you can afford it. That way you can benefit from the tax-deductible contribution to the HSA this year and also withdraw the money tax-free from it while keeping the other money growing tax-deferred in your IRA. That's good stuff. So I'm wondering, well, hold on just a second. I want to look something up. All right, so I wanted to know, does the HSA allow you to pay for your Medicare premiums? And here's our good buddy Kim saying, yes, it does. Even when Part B premiums are deducted from your Social Security benefits, you can reimburse yourself from the HSA. This is Dateline May 4th, 2016. I don't think I've been using HSAs nearly enough in my financial planning for my own self, never mind advising people on this. Look, you're limited. I was hoping when Rob sent me this email that you could roll your whole $400,000 from a 401k to the HSA. Well, obviously you can't. It's too bad. But $7,000 is real money. I mean, that's real money that will be used for something. I mean, there's no getting around that. All right, so we have a sizable health savings account in my wife's name. She will turn 65 and go on Medicare in August. I'm 71, and my monthly Medicare Part B premium is deducted from my Social Security payment. Can we use money from her HSA to pay our Part B premiums, even though they're automatically deducted from Social Security benefits? Can we also pay our Part D prescription drug premiums from the HSA? All right, so can we use the money from her HSA to pay our Part B premiums? We'll find out. I don't know. After your wife turns 65, she can use money from her HSA to pay Medicare premiums for both of you. Wow. And even though your premiums are deducted from your Social Security benefits, you can withdraw money from the HSA tax-free to reimburse yourselves for the Part B. You can also use the HSA to pay Part D premiums, as well as premiums for Medicare Advantage, but not Medigap. Why not Medigap? Well, that's good stuff, man. That's good stuff. And here's the HSA limits for 2019. You need to, let's see, anything else in here? Let's see if we got any comments. Show comments. No comments, huh? No comments right here. Hold on a sec. Let's see what we got for comments here. 8. If you use your HSA to reimburse yourself for Medicare premiums taken from your Social Security check, does that also mean that those of us too young for Medicare can use HSA monies to reimburse ourselves for premiums which are deducted from early? Okay. The guy says you can only use your HSA to pay premiums if you're over the age of 65, among a few other exceptions like COBRA payments or unemployment. Among a few other exceptions, it's not for COBRA though. I get this all the time. I'm gonna quit at 63, go on COBRA until 60, till Medicare kicks in. Well, there you go, man. You can use your HSA to pay for those COBRA payments. It looks like to me. I'm worrying how much IRS policies can hurt widows. When my husband contributed toward his health care premium, what he paid was deducted from his taxable income. Now I pay the full premium and it does not reduce the taxable retirement income I receive at all. All right. It's important to know that if you're near retirement or still working and contribute to an HSA, you may not sign up for Medicare and continue to contribute to HSA. We knew that. All right. And here comes Kim. Said, Bob, thanks for comment. Health savings accounts are different from FSA accounts, which are okay. All right. That's good stuff, my friends. Old Kim kicking butt, taking names here, talking about HSAs. I will definitely give some more thought on how to incorporate this because money going in is tax deferred. Tax deductible. Money coming out is tax free. You can use it to pay your Medicare premiums. Anyway, all right, we'll see you next time. Thanks now.